All right. Good morning, good afternoon, good evening. Whenever you're watching this, wherever you're watching this is Monday Market Update. Today, I am riding solo. So little message to my buddy Nash Paradise, who's nursing a sickness out in Texas. I hope you feel better, buddy. I'm going to miss you. And as a guy who has got a really good finger on the pulse on all these economic numbers, I know I won't do it justice, but I'll do my best. And we'll run through numbers. Me being solo, I'd love, if you have any questions at all, if you're watching this live, fire away in the chat. I'll answer them. If you're watching it on replay, still fire your questions in the comments. I'll go through at least a few times a week, most anything that's published to YouTube, and I'll answer those questions the best I can. I am still answering questions from an escrow video I made 4 or 5 years ago that probably has, it's got hundreds of comments, hundreds of people saying, hey, this doesn't make sense. And, you know, if the video didn't explain it well enough, they've got a specific question. I get alerted when people put those comments on YouTube, and I try to answer them the best I can. That's the whole point of the videos, is to help empower you through education, answer anybody's questions in relation to mortgage, whether that be how do escrow accounts work. Hey, Matt, what do you think about interest rates? All these different questions. Happy to answer them. I'll give you my take, or give us your take in the comments. So let's check out these charts, which we do each and every week. First and foremost, the one that I think people want to see, it's relatively simple to look at. This is just Mortgage News Daily's 30-year fixed rate mortgage average. And by average, it's something to the tune of what is somebody with a really great scenario, high credit, big down payment, locking in at. And locking in at means they might have paid a point or a point and a half to get it. So don't be upset if the rate that you're being quoted or the rate that you're getting with imperfect credit, smaller down payment, or not paying as much upfront cost isn't something like this. But low sevens, it's been a little bit of a bumpy ride over these last few months. We had, you know, December to January see quite an uptick. And despite this uptick, which I'll talk about later, December home sales rose 2.2%. I'm going to talk about that. I'm going to talk about the reason why I think home sales are increasing. Granted, they're increasing from really low numbers. What I expect for 2025 as a whole. And just as a buyer advocate, somebody who works with buyers day in and day out, I'll try to give you some good advice if you're in the market. But this is, you know, hovering right around 7%. We saw Q3 rates come down quite significantly. And we know, those of us that are paying attention, when rates go down near the 6% mark, like they did in Q3 last year, it really lights a fire in demand, for better or for worse, if you're a home buyer. Some might argue they don't want extra competition. They'd rather be able to submit an offer on something that's been sitting on the market for 3 weeks, to get a discount on the price, get some seller concessions. And I'll talk about that as well when we talk about 2025. and my thoughts about 2025. But before we do, let's take a look at the dot plot that, not the dot plot, I'm sorry. This is just the projections for the Fed's moves over the next few Fed meetings. Next Fed meeting is this Wednesday, January 29th. So we're only a couple days away from this Fed meeting. And if you haven't seen this before or had me or Nash or anybody else talk you through it, this humongous favorite here on the right, 99.5% chance, is over the 425 to 450 Fed funds rate mark, which is where it's at now. So this is telling us 99.5% of people, just about everybody, project that the Fed will not cut their Fed funds rate on Wednesday. It would be a huge surprise. It would be a market mover. It's near impossible that it happens. There's still a 0.5% chance. For stats nerds, that's a 1 in 200 shot. And I don't know what would have to happen. There would have to be some backroom discussions about, oh my gosh, did you just see this report that came out that nobody else has seen yet that shows, unemployment is really at 5.5% or something, something wild for that to happen. So it's a near impossibility that the Fed does anything. As always, you shouldn't be concerned about that. That is not going to move the markets one way or another. What you want to pay attention to is, what does Jerome Powell say in his press conference? He always ends these Fed funds meeting with a press conference. He's got a speech that he gives, and then he opens it up for questions. This is the interesting stuff, in my opinion, is when you let people ask questions. It generally is the same type of stuff being asked and the same type of answer from the Fed, but every once in a while you get some interesting stuff in there. And I think that there's some great questions that people can ask about, like, the Fed and how they're going to, move monetary policy with a new administration. That's kind of one of the wild cards right now is we've got the new administration in the White House, and that may or may not have an effect on the Fed and what the Fed does. And what the Fed does, we know, can affect mortgage interest rates. So let's look forward to March. The Fed won't meet in February, but they'll meet in March. And these numbers show that it's still almost a 70% shot that the Fed doesn't do anything. Surprisingly, 30% of respondents think that we'll have one rate cut. It looks like, if I go back, this number a week ago was 27%. And so it's trending up for whatever that's worth, right? A month ago, back in December, this same poll, which if you could see the chart on the bottom, it shows us not just today's numbers, but it also shows us a month ago and a week ago. So we shall see. I think that a lot of people are in the same camp of the Fed's probably going to be on pause for at least the first 2 or 3 meetings. This is meeting 2 of the year in March. Let's see what they have to say about the May meeting. So this is 5 months in, and the majority, although it's getting closer, right, still think that we might stay pat through 3 meetings, no changes, no cut to the Fed funds rate. That's about 50%. And then there's 40% shot that we get one cut. And it's very unlikely in January. We saw that it was a little bit more likely in March. This 41% shot is just saying one of the next 3 meetings, we will get 25 basis point in cut. There's always these outliers that are extra, bullish or whatever you want to call it on more Fed rate cuts. The Fed will say it, and Jerome Powell will say it for sure this week when he talks. They're data dependent. So there are some things that could happen from an inflation standpoint, from an unemployment standpoint, that would justify the Fed doing a cut or 2. But that data is not out that. As of what we see so far, we don't think that the Fed's got much reason or justification to do anything too aggressive with the Fed funds rate. Let's look at June. And now we're starting to get to a place where they're like, yeah, we're gonna have one cut sometime in these first 4 meetings, and that's a 45% shot. I feel like that's had to have gone up. That's 44% last month. It's 45 now, so it hasn't changed a ton. But a week ago, there was a 35% shot per this same chart that there was no cuts, and now it's down to 25%. So the tide is turning into, it might be a little bit sooner, or at least there's a better chance that there's a cut. However you slice it, this is June, month 6 of the year, and we're projecting to have one cut. Like Nash has said in previous meetings, and we've looked at and talked about, you roll back 6 or 9 months, all the projections were 2025 was going to see 5, 6 rate cuts. And now fast forward to early 2025, we're looking at it and being like, yeah, we might probably have one over the first 6 months. We've got the rest of the year here too on projections. So let's just go through it real quick. July is going to, in my opinion, probably, can you get July, Caden? I don't know if we can slide forward. Maybe it's just my side that's frozen. I'm still looking at June.
We only have through June on the slide deck.
Okay. All right. Thanks for that, Caden. I saw the little tabs up there, which I guess these are just placeholders for future, because I know they weren't there before. And I was thinking to myself, man, if we have projections later in the year, it'll be interesting to see, because then we'll go to, this later in the year and be like, remember back in January where we thought that there'd only be one through September, and now we've had 4 cuts. Again, in relation to that, what people need to remember is the Fed is going to watch different economic factors and numbers, and their, dual mandate to keep prices low, to keep employment strong. They're looking at inflation, and they're looking at the jobs market. They're looking at unemployment. If there's anything driving the Fed, there's multiple things. Those are the 2 most important in my humble opinion. So with all that being said, what should home buyers expect in 2025? And I said this in a previous video, but I'd love to repeat it here. If rates stay elevated, which all signs kind of point to that, right? Rates are hovering around 7%. There's no case for us seeing a big downturn in rates. There's also hopefully not a lot that can push rates significantly higher. So if we stay in this range of 7% mortgage interest rates, what does that mean for the housing market? Well, I can tell you what it means in a lot of housing markets I'm operating in, because the best projector of the future is the past. And I've been through these elevated rates and rates staying elevated. I've been through it a little bit now. I can tell you how buyers and sellers both respond. Sellers are starting to learn. And since I only work with buyers, I'm only on the buy side. I've got my bias towards buyers. I love buyers. I want buyers to get the greatest deals. I want to help buyers negotiate credits so they can get interest rate buy downs and things like that. If you're a real estate agent or you're in other professions, you might work with both sides. And so you're like, well, I work with sellers and I help sellers do this and I help buyers do this. For me, all team buy side. And so for buyers, the positives I see, if the market continues how it is there's definitely more leverage. And with rates elevated, we'll probably slide further and further into what people would classify as a buyer's market. A seller's market is 2021, where you put a sign in the yard, you get 17 offers, someone offers $65,000 above the listing price, they waive their appraisal contingency. It's bonkers. And quite honestly, it really sucks for buyers. A buyer's market is a market where, I've got one that we looked at yesterday, and my buyer said we might submit an offer on this place. It's been on the market for 179 days. You know what happens when you have a listing for 179 days? If you want to sell it, you've got to lower the price. You've got to give the buyer some seller credit to buy down their mortgage interest rates. You've got to do whatever you can to get a buyer to buy, because without being a rocket scientist, I can tell you, if your house hasn't sold for 179 days, it's not going to sell at that price that it's listed at, right? Like, a seller would have to be delusional to think that like nothing would change and some buyer would just come along. Sure, stuff takes longer to sell. You can disagree with me there, but my point is, rates are staying higher for longer. It's limiting the amount of demand in the market. Not as many buyers can or will buy. Not as many buyers can or will pay the current price attached to the current interest rate. And so what's going to happen is sellers are going to have to offer concessions. Sellers are going to come off of their price and say, I know we listed at 825, but I'm going to have to consider 775. And for sellers listening, know this: just because your neighbor sold for 825 doesn't mean you can or will get 825 for your house. I've seen in a lot of areas. I've got a video on my YouTube channel. Check out, all kinds of fun stuff on the Matt Mortgage Guy YouTube channel on some disappointed sellers who either bought in the summer of 2022 or have a sale or something in their head pegged to something that happened in the summer of 2022. A quick history lesson: rates were really low in 20 and 21. Rates were really low in the beginning of 22. As rates started to go up, I feel like there was one last push, one last mad dash to housing that pushed home prices up in Q2 of 22. So you might see a May of 2022 sale at $850,000. And if that thing is a model match to your home, again, market dependent, different markets act different, you just might be in a position where in today's current market, at today's rate, a buyer's not willing to pay you more than $775. And so, like I said, I'm on team buy side. Good for team buyer, right? You're going to get a 10% discount. For team seller, I'm sorry, holding real estate long term, like, you're always going to see appreciation, but in short little spurts, 2.5 years later, you might have paid $850 and it's only worth $775. That's just the truth of the matter. And so looking into 2025, that's what I see more of. I see more of, especially, and this is dependent on rates, if rates stay higher and they hover around the 7% mark, there's going to be more concessions taken, and sellers having to offer credits and or a lower price. And it's going to bode well for buyers, because the price is a great thing to have as a buyer. But another great thing to have as a buyer is not all the pressure of, this house was listed on Thursday, they held it open on Saturday and Sunday, all offers are due by Monday at noon. Like, that was a tough time for buyers. And we're certainly past that. There's not many markets that are acting like that. The only time you'll see that is if it's a house at a really entry-level low price point and it's perfect in a perfect neighborhood where there's not a lot of turnover. But 2025, buyers are going to have more time because stuff's not going to fly off the shelves. They're going to have more leverage, and they're going to be able to not only offer a discounted price, but what's more important is the concessions to be able to structure the mortgage in a way that makes sense for them. And I'll end with this, because I've said it multiple times, but I think it bears repeating. I think people really should think about this. If you're a buyer in California, I think something like 30% of the home sales are new builds. And people are curious, like, what is it about the new build? Because I see the houses and they're closer together, and you're living in this tract community where everything looks the same. There's negatives to new builds. People wonder why people buy new builds. I'll tell you exactly why they buy new builds. Because the number one thing in order of importance for a buyer, and it's not always the case, but generally speaking, is their monthly payment. How do you solve for a more affordable monthly payment? You take some credit from the seller, in this case, it's the builder, and you apply it towards buying down the mortgage interest rate, either temporarily for the first few years or permanently through a permanent buy down that's just a 30-year fixed rate at 5.5%. Whatever the case, builders have a leg up that they've got kind of endless wiggle room. They are the seller and they don't want a lower price. They want to offer $30,000 in credit, help you buy down the interest rate so they can keep the price at $800. It keeps their whole development value at, 800 times 200 homes, whatever the case may be. So learn from builders. Builders know the secret to making a buyer happy is offering concessions and helping them structure a mortgage in a way that makes sense to them. I've made videos about it. You would rather pay a higher price with a credit that allowed you to buy down the interest rate. That is hundreds of dollars a month, thousands a year, versus I got this house for $15,000 less and I pay $100 less per month. $100 less per month isn't doing it for people when it comes to monthly payment and affordability. But when I show you a 2-1 rate buy down where you save $800 a month in the first year and you save $400 a month in year 2, that is something that allows a buyer to go, you know what? Like, this works. This works for me and my finances, because although I qualify and can pay $4,000 a month, I'd much rather step into $3,200 a month in year 1, $3,600 a month in year 2, and then $4,000 a month if it gets to that point before I'm able to refinance for years 3 through 30. So it's going to be the year of sellers finding a way with agents who can properly coach them and advise them to do more of what the builders are doing, because the builders are selling stuff and they're continuing to sell stuff at a pretty high clip. It's because of this reason. So any questions for me and my team, more than happy to help out. You can go to greatmortgagebroker.com. You fill out that form. It connects you with my team. We're licensed in 48 states. So depending on where you're at, you might fill out the form in California, Florida, or Texas. You'll speak with me directly. You might be in Tennessee talking to Chad Masters. You might be in Nevada talking to Bo Chase. Whatever the case, greatmortgagebroker.com. Connect with me and my team there. We'll have Nash back next week. Hopefully he's feeling better. We'll get with you. We'll talk about all kinds of different stuff. We'll see if he agrees or disagrees with me on the future state of the housing market and some of the stuff we talked about today. Thanks for watching, guys. Till next time, we gonna see.